Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the markets. That is the stock market, the crypto market, the NFT market, the metals market, and the collectibles market today. Big news coming out of there. Looking forward to have that discussion. We've got Bitcoin down to 67K. Gold has fallen as well. Just touched to 4.9 now. Logan Paul's Pikachu Illustrator card has sold at auction for a record $16.49 million. And Chinese robotics company Unitree releases video of world's first fully autonomous humanoid robot cluster kung fu performance. That is a wordful, and it's pretty daunting. We'll touch on that in a little bit. And delighted to say we're going to have Andrea from Beezie on the show in just a little bit as well. To primarily talk collectibles, we'll talk the Logan Paul auction and what they are doing at Beezie to facilitate these types of transactions moving forward into the future. Can't wait to have that conversation on this specific day. I think Pokemon anniversary is coming up as well, so very good timing. I have got Legendary and Rahim in the co-host seats with me. In the meantime, we're ready to get into it. Just a reminder, friends, before we do, nothing that we say here is financial advice. The market is very, very risky. We do not know anything for sure, so please do proceed with caution and exercise your own judgment at all times. With that out of the way, it is Tuesday. It is the 17th of February. Rahim, how are you doing? How are you feeling today?
GM, everybody, it's been a good week. I was just telling everyone that I was watching the Pokemon auction at 6 a.m. in the morning. So that was definitely fun. And I'm excited to talk about all of regarding like the sale. But can we talk about that article that's been going around like on Twitter where this guy was essentially talking about how he's looking at he believes that friendships are like negative ROI and in life. And it's like the funniest article because like some of it doesn't even make sense. And it got me like very emotional because one of the instances he uses, he's like,
You hate
met
this
this
kind of thing so much.
yeah, because it's just like look at this like particular example. He's like, I met this particular person at the comedy show, realized I have only one interest with him, which is comedy. Realized that my negative ROI is 50 minus 54 hours. So this dude spent 54 hours with someone talking about comedy, and he thinks it's negative ROI. Like, what are we talking about here? It's just annoying.
That
So
is a very, very dumb thing. So maybe I should be doing this with Legendary. I should be adding up how many hours I've spoken to Legendary on the show and outside, and then converting that into how many money-making opportunities we have derived from each other, figuring out if that is more or less than the minimum wage, and then deciding whether we close the show or not. Ledge, if you did the maths, what do you think? Do you think we've got a positive ROI from knowing each other?
I think we got a very positive ROI from knowing each
Financially only? Are you talking, or are you talking otherwise?
other. Both financially, personally, self-growth, entrepreneurial growth, all the things together. But
Okay.
I'm just bringing up the article that Rahim mentioned because there's some hilarious bits in there. So talking about the numbers, part of the article reads, as per my new relationship events database, which is a file, to build one meaningful friendship from scratch, here's what it roughly took me. First contact, real conversation, 8 to 12 hours, small talk, context sharing, finding common ground. Establishing trust baseline, 45 to 60 hours over 3 to 6 months. To be honest, most don't make it past this phase. Reaching vulnerability depth, 80 to 120 hours over 12 to 18 months. So the total boot up cost of a friendship is between 128 and 192 hours. Then you also have annual maintenance, regular contact, 30 to 40 hours, life events, birthdays, celebrations, support during hard times, which is also being tracked, 12 to 15 hours, and context updates, like explaining new phases, projects, or other life events, which is 7 hours. So the ongoing cost of a friendship is between 45 to 65 hours per year. And he is showing how he's tracking that, the comedy show example that Rahim mentioned as well. And then he is applying the math to what this investment is.
Maybe this is just rage bait. Maybe he's just done this on purpose. Maybe this is just fantastic comedy. You just were not involved in the joke.
But there is some truth to that, and I think Rahim will agree with that. Not with a numbers thing, but I do think that this saying that you are the average of the 5 people that you spend the most time with. I strongly believe in that, and thinking who you're spending your time with, whether you do this with a database or you find other ways to reflect for yourself is a very important thing. This is clearly over the top, but the underlying thought of just thinking who you're spending your time with, I think, is a very valuable one.
Yeah, I think that is fine, but I think that is sufficient. I actually saw two things. This feeds into a different point. We're going to get into the main stuff as usual. We'll get into the market stuff, but I've got two ancillary points, and I think this is linked to Rahim's point. The first one is, I think that this is part of the data-driven obsession, which I'm against, and some of you guys really like, which is needing to numerically know a bunch of things that I think historically you just don't need to know. Prime example is sleep. I don't need to know how someone else thinks I've slept. I just wake up and think, did I sleep good? Okay, maybe I need to sleep more tomorrow. So that's like part one, because I think we're trending in this direction, getting like really data driven, which is, you know, it's not bad in some ways, it's helpful. But the other one is, I saw a different article, maybe this is part of the problem as well. Different article saying we're one of the first generations that seem to need research to prove everything. It's like, I don't know, someone could publish a research saying spending some time in the sun is, you know, is going to make you feel better in the day. And then people will be like, oh yeah, you know, I read this article. It said that if you spend some time in the sun, it's like, guys, what have you been doing? Why do you need an article to tell you that the research has been done, that something that's been happening forever is like, do you know what I mean? It's like, it all feeds in to each other. What do you think? I think you guys are more trackers than me. Maybe Rahim's a bit of less of a tracker. So I don't know. What do you think about my point?
I think this is just like about, I completely agree with you. And this is exactly what I co-tweeted this with, that I think this is a question about judgment. Like his first example is that it took him 63 hours to realize that he has only one thing in common. Like, what are we doing, my brother? Like, why is it taking you so long? And it's the same thing with sleep. You just need to be a good, like a judge of character, that did I sleep well? No. Okay, let me fix that. It's the sun thing. Like, you know, is it making me happy? Like, it's just like a judgment thing. Sometimes you just don't need to dive into so much data. I agree.
Led, you want to stick up for the data
Of course,
collection?
I'm gonna push back on that. If it were so easy, why would Whoop and Aura sell millions of the trackers?
I don't know.
If it were so easy, is everyone here sleeping 8 hours? Is everyone the 7 to 8 hours which you should sleep? Is everyone getting enough sleep? Super important. It's
The thing is, the dealing with that symptom is getting something that puts you to sleep. It's like taking drugs to go to sleep or something. Not someone telling you that you keep going, that you're not sleeping.
Outsourcing accountability, and this is like a massive industry. Like all the modern toothbrushes, whatever the plural is, are now telling you, hey, you brushed your teeth for 2 minutes. That is enough. Or
No, that's just your toothbrush, man.
No,
Mine's not telling me anything.
That's because they're selling you the point system. Everyone's like, you know, you go on Whoop, it's the point system, it's crypto. Everyone just wants to sell you points. That's what they're doing. They're giving you dopamine. That's what everyone's doing.
I think serious note, really quick though. We are also the first generation who has to make a shit ton more decisions than any other. And there's I also highly believe there's like a fixed amount of decisions that you can make a day, and they can be meaningful decisions that, like, you know, help you be more productive, get on in life, achieve your goals, whatever. Or they can be decisions like, what do I order to eat? What do I do with this? What do I do with my subscription? What show do I watch on Netflix? And if you spend your decision-making capacity on irrelevant stuff, then that's also going to hinder and block you. Maybe some of these tools and data tracking things can be helpful to outsource some of the stuff that is like a healthy baseline you don't want to worry about.
I do think we need to, we first generation, like managing so many pieces of tech and trying to figure out. And I think, frankly, everyone's got some type of addiction to tech, which we're still trying to work through. But look, interesting start, starting hot on the show. We've got a bunch of other things to get through, some important news. And I think we'll circle back to this at some point. It's an interesting combo. But let's get to the main stuff to get you up to date. As always, we have the price action starting with the majors, which are looking kind of nothing really going on at the moment, to be perfectly honest. We have Bitcoin sitting just a touch down at 67K. We have ETH flat, more or less, just under 2K as well. XRP is down a couple of percent to $1.46. Sol is flat around $85. We have Hyperliquid down 2% to $29. So, not a huge amount going on the major side. Similarly, more or less, you have memes maybe just a touch down, the major ones. Doge's down a couple of percent. Pepe's down a couple of percent as well. Pengu's down a couple of percent as well. SPX is flat. Nothing really to write home about here apart from the very volatile Pippin token, which we continuously say we don't know what it is, why it keeps moving up so much, is down 20% today. It is up 60% on the week. So that is still one which is moving a lot in general, a lot of volatility in that. In terms of the headlines that we're going to talk about, we're going to talk Bitcoin going down to 67K, gold falling just a touch as well. And Ledger will take us through the various parts of the market. Then I will talk about Chinese robotics a little bit. We'll talk Unitree. We'll talk the release of this Kung Fu robot performance video, and maybe some ways, not necessarily to get exposure there, but think through the exposure that we're getting to the various sectors as things just are getting incredibly volatile. Obviously, tech stocks have been selling off aggressively the last week or 2 or 3. And so just thinking, do we want to go into this new tech if everything else is getting sold off so aggressively? I've got some thoughts on the general thesis for drawdown as well here that I wrote out yesterday in a tweet, which we'll go through maybe as part of that conversation. And then finally, we'll talk Logan Paul's Pikachu Illustrator card selling at auction for a record $16.5 million. Rahim will take us through that. And then we'll follow into the conversation with Andrea, CEO of Beezie, who'll be joining us towards the end of the show. Some other things that you should know. Wintermute has launched tokenized gold trading, entering that market. I think that is seen to be, I've talked to a lot of people recently who want to enter tokenized gold, actually, different parties. So I'm watching that. Andre announces Flying Tulip raise for $1 billion is open now. Obviously, that's not a full $1 billion raise. It's deposits that are capped at $1 billion, and all of that money goes straight into Aave. Depositors can get their money back at any time. They say that the way that they'll run is from the interest on the raise. So it's kind of an interesting model. Obviously, if everyone pulls all their money, then there's no more project left. So interesting way to cap downside and keep allegedly upside unlimited. Not my personal favorite, to be honest. I like to actually take, I don't think you can really in practice cap people's downside when you take risks like that. Zero Lend announces shutdown after 98% drawdown in TVL. dBridge launches an MCP enabling AI agents to execute non-custodial cross-chain transactions. I think we're going to hear a lot of news like that coming out across different chains to try to be the most agent-friendly chains. Banker launches a real-time token feed. And finally, Hyena, the trading platform built on top of Hyperliquid, using USDE, Athena's synthetic dollar, have announced packages ranging from 0.8 to 888 USDE packages for its users for the Lunar Chinese New Year. So that's pretty fun. That's it. That's the news, guys, to get you up to speed with what you need to know from around the space. We have a variety of things to get into today, but before we get there, very curious what is catching our attention. Maybe coming to Legendary first this time. What is going on your side? What's catching your attention? What do you want to tell us?
I'll keep it short because I'm gonna go down the MCP route. It's basically MCPs being tools, protocols for AI agents that allow them to interact with different platforms, different services, and yes, it's going to become more common. And I think even more than that, it's going to become crucial to have some sort of agent exposed MCP API or tooling kit so that agents can plug in and use that. Like, the more I'm using my OpenClaw, the more I'm thinking that, I don't know, I'm talking about data tracking. Obviously, I'm tracking my macros, I'm tracking what I eat, and I have an app and I scan my QR code. So there's an AI component. I take a picture of the food and it's in there. But sometimes I wish I just could tell my AI agent, hey, I just had this protein shake or whatever. And I can't because this app doesn't have an MCP, but others have. Now I'm thinking to switch over to a more AI agent-friendly environment. And I think this is going to become relevant at the point when Apple claims they have 2 billion devices in the world. That's a lot. And they have the best distribution. And they have a horrible assistant called Siri. And they have the intelligent Siri. Again, they just finalized the deal with Gemini. They're paying, what, $1 billion or something a year. and they postponed Intelligent Siri to iOS 27 in September. But once they will have some sort of personalized agent infrastructure, which I'm pretty sure they will have because they can't ignore what's going on with their Mac Mini cells and Mac Studio cells and OpenClaw and all the things, and them losing the OpenAI partnership, now OpenClaw coming to OpenAI. So not a good amount of things have worked out for them in this agentic side. But once they do, they will probably do a at least decent job at it and have this distribution that will force people's hands to think about how they not only speak to the human audience, but also to the agentic audience of whatever the product offering is.
I like that take. I like the take. I want to take it in a different direction though. Talking about Apple stock and a few things that I've been thinking. The first thing, and I don't know how familiar you are with the Apple stock or how I know, Ledge, you do a lot of stock stuff, Rahim maybe less so. But I'm looking at the share price. It's doing pretty well, relatively speaking. It's kind of tracked with the rest of the Mag 7, still high. Two things I wanted to say about this. One, first, I really wish that I short all things when you just notice something really dumb is happening. It's kind of what we were saying in the summer when loads of dumb stuff was happening and you just start selling. But actually, I need to get into the habit of shorting at the same time. Apple have just a ton of things that don't work anymore. Siri being one of them. It's just a humongous glaring problem. And I remember when we were doing this podcast stuff, when we were first setting it up, trying to get integrated into Apple Podcasts was, just trying to sign in, trying to do different things. Like there's so many parts of Apple that are broken and don't integrate very, very well. And, entirely reliant on the hardware, I think now, and of course the App Store, which is a big monopoly, though I guess they're fighting that. And I just think when you start to notice these things about a company, you just got to short. This is like my instinctive thing. We talked about Coinbase, for example, not long ago. Let's pull up the Coinbase chart. I've been saying for ages, I've been a coin bear for a while. I sold my coin to rotate out of it purely on the basis that the customer service is terrible. Like the customer service is atrocious. Like it's absolutely atrocious. You've got one of the biggest person on crypto Twitter having to do customer service for you because it's so bad. It's embarrassing. And the stock is down from 400 last year to 164. That is insane. Okay, admittedly, middle of summer last year was a toppish time, but that is a colossal decline. I think you just got to be alive to those opportunities. The more interesting thing, maybe as it relates to the rest of the AI CapEx spend, is that I saw an interesting chart. Let me try to find it. I'll just tell you about it first. Apple seems to be sitting out this whole CapEx thing out. So Amazon, Meta, Google have ramped up their CapEx spend enormously, right? They're all spending way more than what was projected in order to try to power themselves up, in order to, to be part of the to get as much as compute as they can. Apple, from what I can tell, are also sitting that out, Ledge. So you mentioned how they kind of sat out the AI thing in the end because they had to tie up with Gemini. But what do you think about them from this perspective? Because this is a more future-facing idea, right? They seem to be sitting out the data center build-out as well. I'm just going to try and find the chart while you share your thoughts there. What do you think there? I haven't come to a conclusion. Just curious.
Well, there is this article how Apple is winning the AI race by staying out of it. I think the other part of that is Apple started developing their own silicon 5. I mean, they started developing. Everybody came to market like 4 or 5 years ago with the M1, M2, M3, now the M4 CPU and GPU, and we're getting the M5 processor later this year. And they are fantastic. And they have the neural engine at heart, and it has gotten so much better. And if you look at so many models, like look at, I don't know, the Quen TTS text-to-speech models, there's a ton of them that have like an MLX integration, which is natively then rebuilt for Apple Silicon. because it's so good and because it's so affordable to have your Mac Studio or Mac Mini or whatever running whatever you're running, the hardware is brilliant. And it is brilliant on the MacBook. It's brilliant on the iPhone as well. And it's highly, highly AI optimized. So I don't think that it's fair to say that they're sitting out the AI race. Maybe they're not rushing to build the next LLM, but they've been very, very early on to build neural engines 4 years ago for the first Apple Silicon. Like, who cared about that back then? Like, when I bought my first Mac with an M1, I was like, okay, cool, it has a neural engine. So what the hell am I going to do with it? Because I don't have any clue what I need to do with this. Maybe it's running some background processes in it and they're more efficient. Cool. But now it's like, oh, I actually want this. It's really, really good. And other people want it too. So they have played the hardware side more. And given that they have 2 billion devices out in the world, that probably makes a good amount of sense for them. Similar to how you don't see a ChatGPT phone coming to market. So yes, they're probably sitting out the software side a bit, but on the hardware side, they've been one of the earliest companies to adapt to that. And it's been a very bold bet back then to stop doing Intel CPUs and be like, no, we're going to build our own silicon. Like, people criticized them back then. We're like, why do you do that? Intel is doing good stuff.
Yeah, fair. That is a fair point. That was quite some time ago. Those pull up this chart that I just sent in the chat, the production chat.
Yeah.
This is the one on Apple CapEx. It's really interesting, and the take put on top of it is that it's suggesting that this is actually a genius move. This is a really interesting chart showing standardized quarterly capital expenditure year over year. Amazon 42%, Microsoft 89%, Alphabet 95%, Meta 48%. Apple is, you'll see this little green line at the bottom, chilling over the last how many years is this? Over the last 8 years. Sorry, pushing towards, over the last 10 years, not really doing anything, whilst the others are spending and spending and spending and spending. And that's getting ramped up even further now. Whereas Apple's little graph, if you're just listening to us and not seeing the chart on screen, isn't moving. And the take here is that this could be a genius move because the others are spending hundreds of billions of dollars on AI capex. They get to save and see who wins. Do the deals that they need to do when they need to do them. Buy whoever they need to buy because they've got the cash to do that. And if you listen to the Dario interview, the CEO of Anthropic's interview just the other day, talking about kind of being responsible and not overspending, he did bring up the possibility that spending endlessly or too much, people will go bankrupt. Like, I can't remember the exact context of the quote. You need to rewatch that segment, but there is starting to be a little bit of question mark, I think, in the market that, hang on a second, will this all be justified spend moving forward? Can we see returns on all of this spend? And who knows, Apple doing something different could actually be all right here. I haven't got a view. So do you have a thought on this, Rahim, as thinking about kind of Apple sitting this out, and you see this chart and everyone else is going crazy on it, and Apple are just kind of sitting it out?
Yeah, I actually have a lot of thoughts. So for those of you who don't know, I used to be an Intel ambassador during my college days. I've for a year straight on weekends, I used to be educating people on Intel processors. And I think one of the things, I completely agree with what Led said, because one of the things that Apple has done a fantastic job on capitalizing is a packaged infrastructure, even till date. So I still use a Windows PC, and the reason for that is I used to do a lot of 3D rendering and editing, and for the longest time, a lot of these tools were just not made in the Mac ecosystem. But the problem was, in order for you to get these machines made, there was no company that you could go to that would provide you with this tech. There were private companies, but there was no, Google is not making a defined workstation. It was not HP making a defined workstation. All of them kept falling apart. What Apple has done a fantastic job is stabilizing tech, is understanding, okay, how much, if you're putting 64 GB, 128 GB, 256 GB RAM, that it is going along with your motherboard, it's not heating up, things like that. They've commercialized the use of high performance computing power, which I think no one has done, not just now, for I would argue for the last like 10 years, which is why gamers, 3D designers would have to get their PCs made for things like that. And I think ever since they started focusing on their like the M series chips, they kind of developed on that. And now you're seeing, I saw some tweets where there's like a waiting period of 54 days for you to get like a Mac Minis in like the US. So I think they're doing a fantastic job on just like capitalizing on the infrastructure side of things. Like let's say there is a lot of distribution. All these people will be making apps. They want to bring those apps to the App Store. They get that 30% cut. If their model works, all they have to do is like tweak around this AI boom and not go down the route that everyone else is doing. Go for it. I made a tweet 2 days ago. I was like, yeah, I'm like longing Apple, and I did buy a lot of Apple stock 2 days ago, actually.
Yeah, in 2024, Apple facilitated 1.3 trillion in billing around their app store developer billings and sales, and they're making obviously billions and billions on that. They're making the 30% cut on that. So all they have to do is, quote unquote, all they have to do is just to maintain this status of being the most attractive distribution platform for whatever is trending, whether it's apps or MCPs or AI agents, whatever that will be, and make sure to keep that distribution up and keep people locked in, and try to charge or continue charging hefty cuts on what they're doing and offering. You are muted.
Okay, good stuff. I think that was a really interesting chat. I'm really happy to share that chart actually, because it's got me thinking. I need to digest it more. I think both of your points were interesting. Let's keep it moving though, guys. We've got a few headlines to get to before we speak to Andrea from Beezie today on not just the Logan Paul auction, but also what they are doing at Beezie. So excited for that conversation. Let's hit the main headlines first though. We've got the first one, which is, Legendary, you're going to tell us about, just give us the main asset roundup. I know things are not as volatile as they have been for a bit, but what do we need to know?
Yeah, I feel like it's been a couple of days without a Legendary market overview, and there's actually some interesting stuff going on. But starting just with the numbers first, silver is down 2%, gold is down 1%, just a touch under 5K, trading at $4,940. Looking at the ETF side of things, yesterday was a positive day with just a tiny bit of inflows, 15 mil inflows into the BTC ETFs. However, the 2 days before that did see 400 and 276 mil of outflows respectively. And if we look at the tech stock side of things, let me bring up the Finvis map. As you said earlier in the show, we do see a bit of a sell-off happening, smaller correction happening around tech. Nvidia down 2%, Apple down 2% on the day. Google, Meta, Amazon also down anywhere between 50 bips and another percent in the spin. This interesting article on Axios, which spoke to something that's also happening that I didn't see mentioned too much on the timeline, and that is the Pentagon threatening to cut business ties with Anthropic, and just saying that the AI company is a supply chain risk to the Pentagon itself. And the way that this is worded and the way that they are speaking about that, the chief Pentagon spokesman told Axios that the Department of War's relationship with Anthropic is being reviewed. Our nation requires that our partners be willing to help our warfighters win in any fight. Ultimately, this is about the troops and the safety of the American people. And it will be an enormous pain in the ass to disentangle. And we are going to make sure they pay a price for forcing our hand like this. This is a verbatim quote from the article. And that kind of penalty is what the Axios article continues to say is usually reserved for foreign adversaries. So I found that interesting, and maybe it was a bit helpful in kind of explaining what is going on a bit on the tech side of things. And then zooming out from stocks, just going straight into macro. Kobesi letter had this post coming out yesterday in the evening that the US national debt is set to surge 2.4 trillion per year over the next 10 years. That is according to new CBO estimates. As a result, the US debt will likely reach a record of 64 trillion in 2036, which would be double from the debt level from 2023. And it would be triple the debt recorded in 2018, just before the pandemic. And the annual interest costs on federal debt are then also expected to more than double, 2.1 trillion over the next 10 years. At the same time, we're also seeing the rate cut odds on Polymarket not being the highest, still massively not in favor of a rate cut in March. So that might also explain why we're not seeing stocks moving up, but a bit of a weakness there, as well as a stronger weakness in the crypto markets. And ultimately, there's also been this analysis by the head of digital assets research at VanEck, who was looking at what's going on with the weakness in Bitcoin. Three key takeaways there, and then I'm gonna stop my overview. A, there's deleveraging without capitulation. B, it is statistical stress. It's not structural failure, which kind of goes in line with some of the other articles that we went through that said basically this is the weakest bear case for Bitcoin that we've ever seen. And then also this mean reversion bias emerging. It's an interesting article, but the key takeaway from that analysis is to say that even if this is not the bottom, the evidence increasingly supports the formation of a localized bottom. So not being super optimistic, but also not thinking this is a catastrophic situation for Bitcoin to be in.
Interesting. Thanks for the summary. I think I don't like these articles, to be honest. I don't find them particularly helpful. There's all kinds of reading into the situation, trying to input to why you think what's happening is happening. And actually, I think they're drafted in a way to try to make it sound like it's going to go up soon. Like they're drafted with what you want the market to happen rather than what is happening. I haven't read this one in full, but that's like kind of my instinctive take. Maybe one thing I would add here is the general pressure that we're seeing on stuff going down. I thought it'd be interesting just to touch on that for a second. We have, I wrote this tweet yesterday trying to fully articulate why I felt a little bit more bearish here than otherwise. Partly it's just a risk reward thing, right? I explained yesterday how I thought the risk reward was pretty good when I shorted ETH at 4.5K. Didn't hold it as long as I needed to, but I don't mind getting liquidated on something when you're going to get liquidated if it surges through all-time highs, because the risk reward feels pretty decent. So just to summarize it here for people to try to put it all in one place, I just feel like people who want AI exposure have it now. And there's already been a bit of a sell-off here, of course, right? Talked about coin being down so much. It might not be AI, but it's it's a risk on stock and it's been sold off aggressively already. So people who have AI exposure, want AI exposure, I think have it now. But the speed at which AI is moving is causing relentless uncertainty and anxiety. Like that article you just shared about how the government is now cutting ties with Anthropic, which was up until 3 days ago on top of the world. There's just a lot of volatility there. Mag 7 has reached a humongous proportion of the S&P. CapEx had exploded, and crucially, there are no more buybacks being prioritized. I think that's something you need to look into if you haven't already. The biggest private companies, SpaceX, Anthropic, maybe Andrew too, are lining up to IPO this year. Where's the money going to come from to bid on the public markets? Where's it going to come from? Who's bidding to buy SpaceX at 1.5 trillion? And if it is going to suck money out of the market, then it's going to come from the other stuff, in my opinion. Besant and Co. need to do something for Main Street this year. It is the midterms. I like to layer the political side over the top, but they learned last year they can't be so vocal about it. So I think they are going to try to help in that respect. There's obviously the huge secular rotation away from US stocks into metals and international stocks happening as well. And then I had a couple of other things. The Bondi thing where she screamed about the Dow being above 50K feels like a moment. Epstein files I think, are going to wreak more havoc. Not sure how yet, but it's been pretty gross so far. And I think there's a non-zero chance of it playing a role at some point. And I think when an admin is struggling, conflict, domestic or international, can be helpful for the admin to reassert itself and win something. And so I do expect more conflict in the next, during midterm time. So that is my thinking. So that's my thoughts to the downside. Rahim, maybe if you want to come in here for some thoughts. You're buying Apple still pretty happily, I guess. What's your take there, and what do you think?
I really resonated with this tweet of yours. I was actually like reading it this morning. I think it goes back the bit that you were talking about Anthropic. I just feel like it goes back to the thing that we always talk on the show. It's like the president's market. There's so much volatility with the administration, and then you have like the Epstein files drama, and then suddenly you'll have like a model that will come out of like China, and all of a sudden like everyone in like the West is like shaking. So I'm kind of in like the same boat for like majority of the stuff. I do still believe in like that Apple thing, just because I feel like they're working on like that infrastructure. But I'm very much aligned with this take of yours.
Okay. I just wanted to add that in there for it to be on one place. I could be right, I could be wrong. I don't know. I'm just trying to hedge my bets a little bit, get myself a bit of protection when, you know, the rest of the stocks are at all-time highs. Next headline, before we hit the headline on Pokemon and get to the conversation with Andrea in just a bit. Chinese robotics company Unitree showcased a humanoid robot kung fu performance. This is pretty incredible stuff. We have it shared on the screen at the moment. This is the news that Unitree have created or hosted this performance. It's the Unitree Spring Festival Gala of Robots, and where dozens of G1 robots achieved the world's fully autonomous humanoid robot cluster kung fu performance with quick movement, according to them, pushing the motion limits and setting multiple world firsts. If you look at what's happening in this video, it is incredible. They're doing somersaults, they're doing backflips, they're showing dexterity in what would be their robotic joints at the knees and the elbows, and doing things that personally I don't think I've seen Western robots able to do. Obviously, Unitree is a Chinese company. And an interesting point in this tweet from Abhinav saying that if Unitree were an American AI robotics lab, I do think I agree with this, it would be worth 50 bill minimum. I think Figure has been raising at around, I think it might have been 35 in the private markets. I can't remember exactly. A couple of the other American ones have been a lot lower. And they're probably not going to IPO for a few years. But because this is Chinese, it will probably go public this year, and people will get a chance to enter it at around 7 bill. That's the number I've seen for Unitree, which is pretty interesting. So just wanted to share that with you and share the video with you guys as well, because it's pretty incredible performance. And we have spoken on the show about trying to get some exposure to robotics. The way we have done that is by participating in some private rounds. Ledge, do you have a view here on robotics? Do you think you would want some exposure to the Chinese ones? Do you think this still best way to do it is still via private rounds, or do you think you wouldn't touch the space now if it's too overvalued or something like that?
I participated in some of the private rounds. I do like my robotics exposure. I would like to have some more. I very much agree with the fact that a ton of what we are seeing, the robotics sector coming out of the West, appears to be incredibly overpriced. And it's also crazy to think how cheap the G1 is, the Unitree, which we are seeing in the video. On the Unitree website is starting at 13.5K. If you import that thing to, that's the base model though, if you import that thing to Europe, you're going to be around 23 to 25,000 euros to have one, which is still, for how early this tech is, like we're not talking about buying an Apple Vision for 3K, which not a lot of people buying, which is seen as expensive for consumer tech. This is clearly not consumer tech here. This is like, or they still call them like R&D devices or educational devices, and you can like hack around with them and tinker around with them. And last year I wanted to buy one of the Unitree dogs. I didn't do that, but a humanoid one, and like hook it up to my OpenClaw and have my robot walk around my flat. Yeah,
Would be fun.
Yeah, maybe
fun.
A project for later in the year.
Based on looking at this stuff, I think it's going to come way sooner than we expect. I think it's coming very, very soon. But look, there's something to monitor. I think the vertical is overpriced at the moment now, and it might be sit and wait kind of thing. If the rest of the market's selling off, I think this is kind of overpriced at the moment as well. Look, let's get into the final headline. Rahim, what we'll do here, you set us up, tell us what we need to know, and you've got some unique perspective from participating in this Logan Paul auction. Then we'll cycle into the interview with Andrea, CEO of Beezie, who's here to talk the auction itself and what Beezie are doing to facilitate more of these types of transactions in the future. So Rahim, set us up, and then we'll move it on.
So as everyone knows, Logan Paul's infamous Pikachu Illustrator that was sold yesterday at $16.49 million was essentially bought by AJ Scaramucci, who is like son of Anthony Scaramucci, the person who's behind Skybridge Capital. I'm pretty sure you guys know how he does like a lot of like podcasts and a lot of like investment thesis around the industry. Before we talk some bits about the controversial aspect of like the sale around like Logan Paul, let's like take a minute to just go back to like the card itself. So the reason the card is valued at so much is this card was given out in 1998. There were about 38 of them given out in person at an Illustrator contest. You could not buy them, although there is some controversy that there were some of them like found later on. About 2 years ago, there was someone who picked up one in one of those stores in Japan randomly. So there is some controversy about like no one really knows how many exactly did they exist. Out of all the 38 to 40 that are known to exist, about 13 of them have been graded, and the one Logan Paul used to own is the only one that has a PSA 10, so mint condition grade. There are aspects to the controversy that adds, I would argue, to the market price. So Logan Paul had launched a marketplace back in 2022 called Liquid Marketplace, where he was fractionalizing his Pikachu Illustrator for about like 51% of it. And obviously, a lot of people did buy into it. However, they were under massive regulation. In 2024, the platform was like shut down by Ontario's Securities Commission, that a lot of those securities were like not legal. So a lot of people were obviously pissed that they did not believe that Logan Paul owned the card completely. There are two aspects of this that I would argue that everyone missed on the timeline. So Gabriel Sharpio essentially shared a tweet, which is basically the screenshot of their terms and conditions, which said that when you were buying these fractional tokens, they were not self-custodial, so they were stored on the platform. And it actually mentioned in their terms of conditions that they do not directly give you ownership of the card. So there is that legal aspect of it, which I believe a lot of people completely missed out on. However, when he was asked for it, he did mention that he bought back the card in 2024. The website had claims live running for like a year. The people who actually bought in claimed the money back. But obviously, there's a lot of he said, she said around the card. But yeah, that's the story. The gentleman who bought the card for $16.5 million is apparently on like a massive spree of he wants to build a massive treasure called the Trove Treasury. I believe that's what his company or like this endeavor is going to be called, where he wants to buy the T-Rex dinosaur fossil. He's also planning to buy the Declaration of Independence that is, I believe, owned by the guy who runs Golden Auction House. And yeah, there is that absolutely biggest sale of TCG ever. The last biggest sale that existed was the Kobe Bryant 1-of-1 that happened in August of last year for $30 million. But yeah, this is one of the biggest TCG sales, rounding up to the 30-year Pokemon anniversary that is on the 27th of February.
Amazing context, man. Thank you so much for sharing all that. I know you've specifically invested in this market, and so it's great to get that additional context from you. I think what we should do, we should get Andrea up right away. Then Rahim will cycle you out. Thanks for joining us as always. Definitely want to get Andrea involved in this conversation as it relates to the Pokemon auction, but also to talk about what they are building at Beezie. Delighted to welcome to the show Andrea, co-founder and CEO of Beezie. Andrea has built a platform solving one of the oldest problems in collectibles. How do you trade a valuable collectible safely without having to meet a stranger in a mutually agreed location or risk sending it in the mail? Beezie tokenizes physical collectibles, stores them in Brink's vaults, and lets you trade them instantly on base. The card doesn't move, the ownership does. They just did $20 million in volume in under a month after migrating to base. Real takeoff since they made that migration. They've had 140,000 claw pulls, and they're backed by the CEO of Dapper Labs, amongst other notable investors. We're talking at the perfect time. Obviously, Logan Paul just sold this Pikachu Illustrator and Pokemon's 30th anniversary is just 10 days away. So the collectibles market is on fire. It has been for a while. First time on the show with us, Andrea. Great time to have you with us. How you doing?
Hi, guys. Can you hear me? My audio okay?
Yes, it is just about coming through fine. We're good, I think.
I'm not in my home office, so the net's a little sketchy right now.
You've been on the move. You've been on a bit of a tour, right? You're in Hong Kong. Where else have you been recently?
Was in Hong Kong. I'll be in Dubai next week. I really wanted to make it out to Denver, but I just can't do it. We're on the Beezie media tour right now.
The media tour has to continue no matter where you are. That's good stuff. Let's get into this auction then right away. We'll talk Beezie and the numbers that you guys have been putting up and what your kind of business vision is in a bit. But getting straight to this Logan Paul auction, what did you think was going to happen? What do you make of the whole spectacle? Do you think it's good for the market? Is it healthy for the market to see these kind of sales? What's your perspective when someone as notable as that comes into the market and produces something like this?
Yeah, I think, Logan Paul already has a reputation in the space, obviously in collectibles, and I think he's somewhat polarizing. I think that it's it could be a local top with the 30th anniversary coming. It could also be like a Justin Bieber type moment. It's hard to say. I will say for the last, year, we've been hearing people call the top over and over and over again, and prices continue to go up. So it's a really pivotal, interesting moment in time. It's been fun to see CT dive into collectibles and TCG specifically, particularly since we've been building in this market for 3-4 years now. It's really gratifying, but all in all, when I look at this, I think by AJ, it is a brilliant marketing move, right? He's obviously building treasure trove. No one knew who that was 48 hours ago. Now they do. And I think that, we don't know too much about it, but the stories around collectibles are where the magic lies, right? When you can tell a story of how you got this grail, I think many people want to hear it. And it sounds like that's what he's trying to do with treasure trove. I think it'll be, at the very least, interesting to watch and follow along with.
What kind of what did you think about the backlash? So that's like the positive vision potentially of like where the market might go, all the people who are going to be participating in the future. Rahim was mentioning this kind of backlash about the previous there being a certain amount that was sold previously in the liquid marketplace for 2.5 million. Then the whole card was sold at auction. What do you think about these challenges that maybe tokenization has had in the past, and how you guys are, I guess, trying to figure out that problem?
Yeah, I think this is one of those situations where you have to read the fine print, right? And this is an industry that moves incredibly fast, and we push builders and companies to move fast. And leading up to this moment in time, there's been huge gray areas, but I think that it's a responsibility for companies like ours and others that exist to make sure that we're doing things ethically by our community, by our members, and that it is more clear cut, right? Like you have companies like Rally that fractionalized, that jumped through all the hoops and really did things the right way. And then obviously you have this company like Liquid Marketplace that we didn't do things the right way. I think it's a really nuanced conversation, but the bigger picture is that, we are a fledgling baby industry. And as consumers, we have to be really, really careful where we're putting our capital.
You are muted.
That makes entire sense. What are you noticing in the market behind the scenes? Like, I think you probably have incredible data as to how the market is moving, the way the market kind of pulses up and down over time. Are you seeing more demand in the high end stuff at the moment? Are you seeing just broad demand across the board? Is it also maybe moving? And we've only talked about Pokemon cards specifically at the moment, right? I know you guys have ambitions to, and have actually the possibility to collect other things too. What's the state of the market more generally as you kind of, across the board, not
I
just
mean,
Pokemon?
yeah, it's collectibles are more and more being looked at as alternative asset classes, whether we're looking at Birkin bags or TCG. There's multiple segments within the vertical. TCG is where we've focused since we launched, since right around January 2025. I think that's kind of where the story starts. But it's been interesting to see behind the scenes buying. I'll say that, because you have platforms like ours that are moving massive volume, talking about Courtyard, Arena Club, PSA, GameStop, obviously the guys at Collector as well. You're seeing the prices being driven up. So, an example is we were buying a bunch of One Piece Grails from someone that we've worked with since our last days. And he was talking about how one of the teams, I won't say which one, came in the store and bought, a couple $100,000 of assets, paid over 100% fair market value. And that's a story that we're hearing over and over and over again, right? Like the sort of beautiful stories about vending at IRL events, it's just different now, right? You have these companies that just have capital that are sweeping. And I think, that's probably the bigger story. And the question is, what's that doing to the market overall? And what's going to happen to the market overall with those kinds of mass purchases? But, we'll see what happens. The demand isn't going anywhere. We're only seeing it increase.
One more question. I know Ledge wants to take it into the product, but to your point about the way this dynamic's completely changed and how certain people might just come in and sweep everything. Just saw a tweet from our good friend of the show, Moritz, big trader, collector. Said, I want to start building a collection of Pokemon cards. Which crypto sites are worth checking out for that? And one of our other big listeners, Swizzy, replied, Beezie. And then he asked, do they have a good amount of supply? That was the first question he asked. So how do you, and then Swizzy went on to ask, he said, listen to the show because you got to find out. So how do you make sure you stay on top there when you see all these people sweeping? How do you make sure you're right there with that?
I mean, we're always chasing the demand and supply, right? Like that's been our story since day one. What has interestingly evolved is to have, I'll talk the claw on the gamified layer first, then we can talk marketplace, because I think there's a lot of opportunity on the different marketplaces because you're really seeing the volume being driven towards the gamified layer across the board on everyone. But we have designed the activations in a way that the chase is real, right? Like the chase of a grail in real life is real. And I think that that's half the magic around collectibles. So when you're using our gold claw or our $50 claw, there's not 20,000 assets in there. We have like these PvP moments of people coming in and chasing the same grails and just sniping each other, legendary knows. And, I would rather open 20 new claws that have attainable numbers so that these PvP moments can happen than one or two that has 20 or 30,000 assets in it, because I think you lose the fun when they're too big. At least that's the feedback we've gotten from our community and our members. I think there's something really valid to that, and that's an evolution that's just happened organically. Now, with the marketplaces, and this goes across the board, there's insane deals that you can get off of not only ours, but others, because people are coming on sites like ours. They're playing the gamified layer. They're doing it to feel something. They're going. And then they might be sitting on some inventory that, they're not in love with. And you make low offers. And a lot of times they're getting accepted on like really liquid, interesting slabs. I'll say that. I mean, we see it every day. And so that's, if I'm going to give any off on the show, it's go scour the marketplaces of not just Beezie, but some of the others, because you can actually get some really good pickups.
Yeah, that's a very good point. And maybe I want to double down on this, like on the claw design specifically, and when it also comes to collecting versus holding. Like you obviously said you want to have a couple grails in there that people chase. What is what are the stats when people are actually hitting a grail, are hitting the Blastoise, the Charizard, whatever the Gengar, whatever the trending card in there is? How many of these grails are being kept versus being like sold back to you guys? And also, what I would be interested in is, because I did it and I did it extensively, right? I started redeeming the grails that I pulled from Beezie, and I have them all sitting here with me. But how many people are actually redeeming the cards because they want to have physical cards versus holding them? Because I'm conflicted. Like I really love looking at these things, but I also, I have to pay customs to get them to Europe. Like for me, it would
Yeah.
be way better to just have them stored with you, but then I couldn't look at them. And I would be interested to know how other collectors are doing that.
Yeah, so first of all, with the odds on when you're pulling, so if you go to view odds, those are dynamic. When we're one of the few marketplaces, and obviously gamified layer, that actually has dynamic odds. So those are being updated real time, as is our average value. Like you'll see that average value go over 300, and it's not infrequently that happens. With the hold versus swap, it's different on every claw. So you have a higher hold rate on this claw because people are really chasing grails for their personal collections like yours. So we do see a higher percentage of people, when they get the hit, holding it. And, quite frankly, like that's one of the pieces that we really like, because people are holding things that are significant. They're building their collection. We're seeing people fall in love with TCG again that, they haven't been into for the last like 10 or 15 years. So that's fun. The other clause, on the lower value clause, I think the swap rate's like 99%. So you're not really seeing people hold that much. They're playing, they want to feel something, they have fun, like the dopamine's there. And sometimes they will, but those are definitely more transactional.
Ledger, I can't hear you.
I can't either.
And the physical redemption aspect, like how many of the grails are actually redeemed for physical cards versus continued to being stored with you guys or with Brinks?
Yeah, the physical redemption rate is still incredibly low. We actually see a fair amount coming outside the US because people don't have the same availability around TCG in like Spain, for example, as they would, if you're in the US and going to your local card shop. So our redemptions over US are a decent level, but I wouldn't say that, it's taking up the majority of the day for our vault team.
Gotcha. I wanna move it. Or B, do you want to come in here?
No, I was funny thinking of the capital outflows that are happening just in the rest of the world out of US is kind of happening anyway. I'm just thinking Pokemon cards is kind of the same thing. Like gold is moving out of the US, people are reallocating outside of the US, including Pokemon cards. You got to get it into your house in Europe rather than being in the US. So carry on. I think you're going to go on to revenue.
Yeah, absolutely. You did migrate very recently from Flow to Base, and after doing so, you did see massive revenue numbers. You had the 1 mil revenue day. What was the thought process behind moving from Flow to Base, and also how important do you even think that this chain infrastructure is? Because I know we've been speaking a lot, and you have this Web3 facing part of Beezie, but ultimately you also want to face to like non-crypto retail customers who probably are not too interested in the underlying tech. So how do you balance the two of these?
Yeah, I think an important clarification is that we didn't migrate to Base, we integrated Base, right? So Base was our first step towards going multi-chain, and that's a big part of our story. It's the first step, it's not the last, for sure. We, at the end of the day, are a marketplace and will continue to expand across chains as all marketplaces do. As much as we like to think that, the chain is somewhat irrelevant, it's still, at least in Web3, quite tribalistic. And, we want to touch everyone that's on chain. And that means continuing to evolve and expand into the larger consumer chains to make sure that, if you are someone that is a Solana maxi or a base maxi, there's a home for you on Beezie. Now, for our Web 2 users, I mean, we're a Web 3 native team, so that's been our focus since day one. And Web 2 obviously is a huge, huge market. And we will try to, and I think we've done a pretty good job at this point to abstract the chain as much as possible. But I think that there's also an opportunity to gently guide and kind of coach people in their on-chain journey, right? You don't want to force it down someone's throat, but you also, if they're going to come and use a platform like ours, there's real benefits to being on-chain that, I think that people can start to learn.
Makes a lot of sense. Proper founder question here in a market which has clearly deteriorated on the crypto side in the last few months. And then also what I've noticed is, I'm acutely aware of, is increasing distaste or dislike for crypto itself from people on the outside. So just curious from your guys' perspective, to what extent, because I think we will want to at some point start to reach outside of our bubble too. To what extent do you advertise when you do have when you are pushing on Instagram and through alternate channels that you are a crypto Web3 native company, or do you completely abstract that away and just focus on the experience, focus on the collectibles? Very curious for your kind of strategy there.
Yeah, I mean, our content that we push out from our main on Instagram is very different from what we push out on X, for example. I wouldn't say that we completely shy away from crypto. We, for example, have highlighted being on Base. Obviously, it's Coinbase's blockchain. Like, those brands are relevant in Web 2 along with Web 3. Even the OpenSea partnership, I think there's a lot of people that don't necessarily, they're not crypto native, but they might have awareness to who OpenSea is. So some of those brand partnerships we highlight, but for the most part, I mean, we're partnering with people that don't have Web3 followings, right? They're Web2 influencers, and we're introducing Beezie to their community, and we're trying to build awareness there.
Okay. Yeah, that's really interesting. I think as teams are recognizing, I think, two things. One, outside of Web3 is important, and two, that you're going back to your earlier point on multi-chain. You want to touch the users wherever they are, and I think people are a little bit scattered on chain. People who really liked Solana kind of like to stay on Solana. People who liked ETH like to stay there. There are these different tribes, and in the end, you want to be able to service all of them. Thinking from the strategy perspective again and the business perspective, what would you say the current business plan is? Like, where do you see most revenue coming from? Is it from the claw? Is it from taking cuts on sales? And do you see that business plan evolving as the business maybe evolves with the collectible market? I suspect a lot of it is reliant on Pokemon at the moment, but I know you do other stuff and maybe have aspirations to do more of that. So curious to see how your business plan intends to evolve over time.
Yeah, and I think, collectibles in general are huge, and we've been building for Web3 for a really long time, and that, again, is TCG and leans into that. But we came out as multi-category for a reason, because we didn't want to position ourselves and pigeonhole us in just one corner of collectibles. Very similar to the way Whatnot came out and started expanding gradually over time with what they had on platform around brand partnerships. We'll do the same. But you also have to balance the opportunity and how big the market is with being a really laser focused team, right? And as a startup, that's how you survive. It's flexibility, but also focus into what's driving your revenue and what your community is asking for. The claw obviously drives really big numbers, the maths. I think that's why you're seeing all these, sites pop up. And it's fun, right? But we look at the gamified layer as the answer to any marketplace's cold start problem. It's getting new participants in the door. It creates great user-generated content. But at the end of the day, the piece that's the most impactful around our platform in the future is going to be the logistics and, you know, the overall approach to just tokenizing assets.
Okay. Very interesting. A couple more questions as we think towards the future and before we close out here. What's the thing that you're most excited about coming up? You've mentioned a variety of things. What's the thing that you're really excited about coming in the next few months?
I think our two biggest opportunities are to continue to expand across chains and our token. Like I've said this, we haven't publicly announced the Beezie token coming yet, but I've brought it up on different interviews, and it takes up, you know, 80 to 90% of my day right now. We are working really, really hard to make sure on day one we are incentivizing and pushing the right behaviors for holders, that we're creating utility that doesn't exist on any other platform right now. And we're basing that utility off what we know drives users and drives volume at this point. So I can't get too deep into it, but it's something that I'm incredibly excited about. We've brought in some of the best brains in the space to work on this with our team. And I think that it's going to set the tone for platforms like ours and future tokens that gets pushed out.
Okay, well, whether you can go more, I'm going to ask one follow-up there, whether you can speak to it specifically or you can take it in a slightly different direction. What, in 3 to 6 months time, whether it's token related or not, what would you guys at Beezie think we are in a successful moment if these things have happened? Like in 3 to 6 months time, what will you want to be able to look back on and say, yeah, these are the internal metrics that we want to hit and be happy with and know that we're on the right track?
I mean, as a business, we are always driving revenue and new users. Like that's just the fundamentals of building. So those are the key metrics that we're pushing and following every single day, week by week. And obviously, you know, we have those benchmarks and we have what the year looks like laid out there. We've already exceeded any internal forecasts that I've had, and I'm super proud of that. And I wanted to continue that growth at the levels we're growing at right now. I think, you know, around the token in 3 to 6 months, I want it to be obviously wildly successful. I want people to feel like it's a real integrated piece of the ecosystem, and that, you know, we're one of the few tokens that actually make sense on a platform. I want people to feel like they're excited for the future of Beezie and that they're active participants, and, you know, not to get too deep into the, you know, the equity versus token evolution, but there's a conversation and a narrative that needs to continue to be pushed that I feel very strongly about, that currently, you know, there's just a lot of restrictions around, but there's some really amazing teams working on this that will allow holders to benefit from future liquidity events for, you know, companies like ours. And I think that that is paramount to this space growing up, to token holders feeling more secure about their investment and their, you know, their capital that they're putting into tokens. And, you know, that's one of the pieces that, you know, if we can get that right in the next 3 to 6 months, it's something that I'll be really, really proud of. And I would call, you know, a massive win.
Very exciting. Very, very exciting. So we will keep an eye out for that. Is there anything else, Andrea, you'd like to share with the audience as we come to a conclusion?
I mean, we shared a lot, but I would say like we're probably one of the most welcoming, fun, and knowledgeable communities in the TCG space. So if you're seeing it all over your timeline and you feel a little like intimidated or daunting, that you just don't know where to start, hop into the Discord, start DMing with someone that's posting about Beezie. My DMs are always open, as are my co-founder. I would say just, you know, start interacting and engaging and participate.
Sounds good. You heard it here first. If you want to follow along with the Beezie story and the next few things they've got planned coming into this year, The handle is, of course, at Beezie, Beezie on Twitter. So follow along. Andrea, it's been an absolute pleasure to host you again. If you want to follow along with Andrea's handle, it's at Andrea Myellie. Been great to have you with us, Andrea. Thanks so much for joining us. We'll have to do it again soon.
Thanks for having me, guys. Bye.
Excellent. Really interesting conversation. We're going to continue to try to host the best conversations in the space on a routine basis. Just a reminder, we do this every single day, Monday to Friday, 7 a.m. Eastern time, live on X Video, YouTube, and you can catch us on Apple and Spotify podcasts as well. We'll be back same time, same place tomorrow. Have a wonderful day. Take care. We'll see you then. Bye-bye.